Okay, welcome everybody. Let's make a start. If you're here to discuss leveling up, then you're absolutely in the right place. We'll do introductions in a second, but this is the second webinar that we have run, which is focused on the leveling up agenda and the leveling up fund in particular. So back in February, when we did our first webinar, we had the leveling up prospectus, but we didn't have the exact detail of the application process, which we now have, along with an additional technical note. So this webinar is focused on boosting your understanding of the process, and through that, hopefully boosting your chances of making a successful application. So let's do some introductions. Our three organizations, Cadence Innova, Mutual Ventures and Project Centre, have come together to offer a support package to areas that are looking at making an application to the Levelling Up Fund. I'm Andrew Laird and I'm the Managing Director of Mutual Ventures, and I'm delighted to be joined by two of my colleagues from our partnership. So Tricia, would you like to say hello?
Hi, thanks Andrew. Yes, I'm Tricia Phillips. As you can see, I'm the Managing Consultant for Cadence Innova. We're an independent award-winning management consultancy focusing on change and transformation. And pleased to be here today. Thanks, Andrew.
Thank you, Tricia. And then Bharati.
Hi, everybody. I'm Bharati Godke. I'm an Associate Director at Project Centre. We are a leading streetscape design and engineering and flood and water management landscape architecture company, providing all kinds of services to local authorities. Thank you.
Thank you very much, Bharati. So you'll be hearing from Tricia and Bharati later on. So the agenda today then, we'll do a quick recap of what we know so far about leveling up. Now, those of you who were on the previous webinar, a little bit of this will be repetition, but we've also got some new information from the technical note. Then we're going to walk through the application itself and look at the three key sections of it: strategic fit, value for money, and deliverability. And we'll be providing some insight and thoughts into each of those areas. And then we will have plenty of time for questions and discussion at the end. Please use the Q&A function to submit questions. We'll try and get to as many as we can, and if we can't get around all of the questions, we will send out a follow-up Q&A document addressing any questions that we didn't have time to deal with. So hopefully that all makes sense. So moving on just to talk about what we know about leveling up so far. So I think, as everybody now knows, this is likely to be the key driving force for the government's domestic agenda. It is about reducing inequalities, and there is a change in focus, I would say, probably towards investing in regions rather than addressing local inequalities. And you might see this play out most clearly in the fact that in London, there's only two of the council areas in London which are category 1. So it's very much about looking at areas and geography. The total fund value is 4.8 billion over its lifetime, and the government are hoping to spend 600 million of that this year. And we'll say a bit more about that later, because there is quite an emphasis, particularly for round 1, on projects which are ready to go. It is designed to support regions, cities, towns, and communities, not just with the physical infrastructure, but the social infrastructure as well. And what we now have is the full prospectus and the bidding process, which have all been launched. So in theory, we have everything we need now to start making applications. Local areas will be able to apply for up to 20 million for each bid, and I'll say a little bit more about how many bids each area can put in a second. The fund, in terms of central government, because you will all have individual relationships with different departments in central government, it's jointly managed by the Treasury, the Department of Transport, and MHCLG. And projects, this seems obvious, but they must have real impact. But the key thing is that the impact has to be delivered before the end of the current Parliament in 2024, which for some of the larger projects will mean trying to get going pretty quickly. And the government, as many of you will know, has official guidance on bidding for public money. That's known as the Green Book. with Levelling Up very much in mind, that Green Book was updated just before Christmas, and there were some key changes in there which have impacted the emphasis of the application form actually as well. So we will talk a little bit about that. On the information which has been produced very recently, I think it was maybe about a week and a half ago, there's some key additional information in the technical note which sat alongside the application. So local authorities will be able to submit a number of bids determined by the number of MPs whose constituencies fall within their boundaries. So it was a little bit confusing, I would say, in the prospectus just to exactly how many bids an area could put in, but it's very clear now that it's based on the number of MPs. So say, for instance, a complication could be an MP whose constituency was across a boundary. One of the local authorities would have to be nominated to be the lead authority for that. And the MP support is very critical. It's one of the first questions on the application form. There will be £125,000 worth of capacity funding available to the 93 local authorities in England who are categorised as Category 1, and that will also be available, so the technical note now says, to all councils in Scotland and Wales. That funding is primarily available to support bids for round 2 onwards. Package bids are permissible, but they must be aligned and make sense as a whole. So by package bids, we mean a single bid, but with perhaps a couple of different projects involved in it, but they have to be aligned around the same theme. It's also possible to put in joint bids. So if you are a couple of district councils or 3 district councils who are beside each other and there's a project that it makes sense for you to join up and bid for, then that is also permissible, and the budget limits for those bids would be added together. And then for larger transport schemes, those bids can be up to 50 million and can be submitted with the support of the relevant transport authority. So that would tend to be a county council or a combined authority. And then finally, further information, this is according to the technical note, will be published in April, inverted commas, in the form of FAQs, and with further guidance coming in the spring. So the FAQs, I know from speaking to quite a few of you, you're submitting questions at the minute around the application form and looking for some clarification there. So those FAQs would hopefully cover those. The further guidance in the spring, I would expect to address what the future rounds will look like. So in the previous webinar, we talked about the importance of the Treasury 5-case model, and I just wanted to very briefly describe how the application form aligns with this. So you've got your 5 core cases there, which are outlined in the Treasury Green Book and have indeed actually driven the shape of the application form. So part 1 of the application form is strategic fit, and that is very much based around the guidance on the strategic case. The second part of the application is around value for money, and that's very much based around the economic case. And then the final part of the application is all around deliverability, and that covers the final 3 cases. So the commercial case, the financial case, and the management case. So I'm not going to go into any of these in detail now, because as we talk through the application form, we will in fact be describing each of these cases. So I'm going to hand over to Tricia now to take us through the first set of the first area of the application form, which is strategic fit. Tricia.
Great, thanks Andrew. Thanks for that high-level view. So we're going to look a little bit more in detail at the 4 aspects of the strategic fit. As you can see, the first one there is MP endorsement. We can't emphasise enough how important it is that you determine who the MP is and you start the engagement early. Why is that? Essentially, you'll need formal endorsement, and this comes in the format of a letter, and that has to be attached to the bid. So really important that they show local support and that for your bid to be successful, the MP backing is pretty critical. So we're suggesting, as we say, that you get in early, you make sure that you determine who the MP is and how you gain that support. The next aspect then is stakeholder engagement, and I'm sure you'll all be familiar with the importance of this, but it's asking that you have evidence-based stakeholder engagement. There needs to be wider engagement, both in terms of the support and the evidence, and how that links really with kind of ongoing consultation. So you will be asked to provide letters, methodology, how, of course, the stakeholders will vary from bid to bid, but it needs to show that there is local overall engagement. And that could be local businesses, public transport, if there is a transport element to your bid, providers in terms of police, emergency services, and then community reps, environmental representatives, and even universities and FE colleges if they're relevant. You can also get secondary support. So Andrew mentioned about MP support. They can actually give non-priority support. So it may not be the MP that actually backs the bid, but they can also show support. You'll need to explain in the bid actually the process that you use to identify the stakeholders and how you reached out to them. So of course with COVID, there needs to be an element of innovation around how you reach the groups. And they'll expect to see special effort for any of the groups that really aren't normally easy to contact. And lastly, sort of any controversy around campaigns or activities. So it'll require you to show the support and in some instances, the opposition. So the other piece there is showing how all of the stakeholder engagement has informed the bid. So what actually did you discover what were the insights during the engagement that actually led to some of the outputs to the bid? And lastly, any authority obviously responsible for delivering and transport responsible for delivering have to show their absolute support for the bid that you're making. So that's another piece that's really important. Thirdly, then the case for investment. And this is really, as Andrew mentioned earlier, around the Green Book. So it needs to be clear that there is a strategic case for this investment. It can include things like market failure. So why is the investment needed? And there needs to be clarity on any public or private funds that are also leveraged to help this project get off the ground. So thinking about a private sector developer as an example, they would need to actually put in a minimum of 10% funding and contribute, because of course they're likely to benefit from any investment that's made. So it needs to be local in context. So what are the barriers? Perhaps it might be growth, and therefore what will this project do in terms of responding to those challenges? So again, in the bid, it's really about helping the person who's looking at the bid understand what the context is. And they talk about the characteristics of the place. So is it recovery? Is it connectivity? Is it regeneration? What is it? What's the characteristic of the place in which the bid is being made for? And of course, with transport, the options assessment requirement will need to be included in the bid so that you can show any OAR in terms of transport. And then it goes into another level of detail around outputs, outcomes, indicators, targets, and measures. So each of the bid has to actually show, for example, if your output was to develop a commercial space, you would then perhaps use the outcome to be accessibility, and then your indicator could be something like footfall. So it's really taking it down to a level of detail that helps the assessor understand what the outputs will be. There's also expected to be a theory of change, and that's in line with the Treasury guidance. So what are the steps, what are the assumptions, quality, strength of evidence, and of course the wider context. And that leads on to the last piece, which is the alignment with the local and national context. And that's why is this proposal supported, and why is it supporting local priorities? So could that be community, culture, economic, but it also needs to align with relevant strategies. So things like local plans, industrial strategies, and any other local strategies that are happening in the area in which you're bidding. And then from a national level, how does that align with UK policy objectives and of course the law? So for example, net zero emissions. So what is it? How does it interplay with the national priorities? If it's a transport project, carbon benefits will of course come into play, and any local road projects will need to think about the cycling and walking infrastructure and any bus kind of priority measures that need to be in place. So essentially it needs to complement other investments. So whether that's town funding, whether that's transforming city funds, but you are being asked to show and evidence how it impacts positively locally, and it aligns very much with the national agenda. So essentially that's the strategic fit. We will have opportunity later for questions on that, but that takes us down to another level of detail, Andrew, on how that the strategic piece will need to be responded to in the levelling up funding.
Thank you very much, Tricia. And that strategic case is really important. One of the key elements of the Green Book changes that I spoke about earlier, which took place just before Christmas, that there was an appreciation in government that the strategic case for business cases were generally quite weak, and actually not enough effort was going into them to show how individual projects were aligning to local strategies and national strategies. So really important to focus in on that case. So if we move to value for money now, I find this very exciting, as I'm sure you all do, but not as exciting as the Treasury officials who will be looking at this will find it. So really important to focus in on this case, because this is really all about one number. This all boils down to one number, which is the benefit cost ratio, which is essentially what is the bang for buck? What benefits do you get in terms of monetizable benefits for the investment which is being made? The application is broken down into five areas, but everything is building towards a benefit cost ratio number. So if we take the first area, appropriateness of the data sources and evidence, this is about you demonstrating that you have understood and quantified the local challenges and problems that your project is looking to address. It's looking for evidence around appropriateness of any surveys or data sets that you've used, and that the data that you're using is actually relevant in terms of the problem that you're trying to solve and the project. Because what I think the Treasury have often seen is data that shows problems being used to support a project that actually isn't directly linked to addressing those problems. So this first set of questions is really all about testing that the data that you're using and the evidence that you're using isn't nonsense, is appropriate, and is up to date. The second element is on the effectiveness of the proposals in addressing problems. So that's actually at the end there, but that's the second area. And that's looking for evidence that the intervention that you are proposing will actually address the problem. So we're looking for a list of the benefits here, which will be achieved through the implementation of this project, and also an explanation of what methodology that you've used. So a very clean example would be of a benefit would be the land value uplift of that would result from a proposal. There are also other types of benefits like broader health benefits. So what I'm going to talk about later through an example is how the guidance expects you to have two different types of benefit cost ratio. One is an initial benefit cost ratio, which looks at very direct impacts of a project. And then there's something called an adjusted benefit cost ratio, which takes into consideration wider benefits as well. So the third area then is obviously the flip side of benefits, which is costs. So the economic costs of the proposal, and that's the cost to the public sector, the cost to the exchequer overall, and bearing in mind that we need to think of the public sector here as a whole. So it's not just the cost to central government, it's the cost to all of the public sector. So for instance, that in a very clean example would be at the very least the value of the Levelling Up grant. And when you're looking at both benefits and costs here, you need to be thinking about sensitivity analysis. So can you demonstrate that you're not being overly optimistic? Can you show some resilience in your modeling, that if your possibly quite optimistic benefits don't quite come off, does that have a big impact? So there is quite a bit of analysis there needed, and that takes us into the third area, which is the analysis of the monetized costs and benefits. So this is really getting under the skin of your declaration of what you think the benefits will be, and also the costs. And there are, as you would expect, a number of tables within the application which you would need to be very clear in filling out and saying, these are the benefits that we think will be achieved, here's the value of them, and here are the costs associated as well. So all of that's all well and good. That's your raw information. Then the key bit is what we do with it. So this is the value for money of proposals. So as I said earlier, the core thing that you will start with is that initial benefit cost ratio. There is lots of guidance around how to work this out. There is the Treasury Green Book, there is the Department for Transport's analysis guidance, and there is the one which I really like actually is the MHCLG appraisal guidance, which give you very clear guidance and some really good examples actually on how to calculate benefit cost ratio. So that initial benefit cost ratio would be the cost of the project to the public sector against the direct benefits. Then as you move into the adjusted benefit cost ratio, that's where you can start bringing in wider benefits like access to amenities for others in the area, or public health benefits. Now, another key element of this part is the stuff which isn't monetizable, which you can't put a monetary value on. So when the Green Book was amended just before Christmas, one of the key things was trying to get people to take this a bit more seriously, because Treasury officials have tended to always look at the stuff which can be monetizable. But actually, as we all know, for projects like this, for the type of projects that you'll be thinking of, a lot of the benefits you can't put an exact number on. Now, this application makes it really clear that it wants to know what those are. So it's really important that you think about those wider benefits as well, that maybe don't have a readily available monetizable element to it. What they also want to look at here are risks and uncertainties, which are really important to capture. And actually, in an application like this, it's stronger to be really open and upfront and honest about risks, because the people who will be looking at these applications understand that no project like this is without risk, and a greater risk to them investing in your project would be if it seems that there isn't that the team putting forward the proposal don't have an appreciation of risks. So I'm just going to run through a very quick example on benefit cost ratio. So let's say that we've got a project in a town centre. It's a privately funded regeneration project that would be set to deliver external public benefits. So that's things like amenities and health, estimated to be around 5 million. So an example of that would be a housing project or a regeneration of a town centre where it's private investment. That private company will obviously want to do commercially well out of the project, but actually the public sector can see that that project being completed has wider benefits, and we're saying that those wider benefits are worth 5 million for the purpose of this example. However, there is a problem. They can't get the private sector investment because there is a need to, let's say, clean up the land to make the private investment viable. So there's a cost associated with that, which is 5 million. So once cleaned up, the value of the land, which is owned by the public sector, would be 5 million. And to make this a really simple example, we're going to say that the uncleaned up land is worth 0. So to unlock the project, to get the private investment, the Levelling Up Fund needs to put in 5 million to do the cleanup. Now, remembering that I talked about initial and adjusted BCR, so the initial benefit cost ratio is the new value of the land, which is 5 million, divided by the cost to the public sector, which is also 5 million. So we're not including any of the external benefits at this stage. So the benefit cost ratio at this stage for the initial assessment would be 1. However, once we include the external benefits, which is that first point, which is the wider benefits, then the benefit total comes to 10, but the cost to the public sector remains at 5. So actually the benefit cost ratio in your adjusted benefits cost ratio increases to 2. Now, why are these numbers 1 and 2 important? So generally speaking, in the Green Book guidance and in the MHCLG guidance, a benefit cost ratio of less than 1 is regarded as poor, because that's essentially saying the government is getting back, or the public is getting less value for against the government's investment. Between 1 and 2 is acceptable. So that's saying, for instance, we're investing £1 and we're getting £1.50 back in terms of benefits. Anything over 2 is classified as high. So if your project can be shown to be delivering twice as much or more benefit than what we're asking the Levelling Up Fund for, then that's a really good result. So it's a little bit messy, but the MHCLG guidance, which we will send a link for, actually has a number of examples which I think are really helpful. But it's so important that if you're working on an application form here, that you need to get your head around the benefit cost ratio, because that is one of the key things in the entire application. So Bharati, I'm going to hand over to you now to talk about deliverability.
Hi, everybody. So deliverability is made up of the 3 remaining cases. That's the financial, commercial, and management. And you also have the monitoring and evaluation plan as part of this section. In terms of the financial case now, that's about the financial ask of the fund. So how much, what is the value of the capital grant that you want to request from the UK government? To show this, you need to provide details of a cost and spend profile of the project and set out clearly what other funding has been secured from other sources, perhaps other funds, or could be SIL or whatever is available. Any major interdependencies where funding has not been secured needs to be set out. And a spreadsheet has been provided to show how all of this funding comes together. And this is quite important that it's pretty accurate, because that's what will be used as the basis for any funding agreement should the bid go through. Of course, as Trisha mentioned before, about a minimum of 10% of local and third-party contributions of the bid cost is encouraged. And if private sectors such as developers stand to benefit from this, then they will be expected to contribute towards the work. You will require evidence that shows third-party contribution. This could be letters or contractual commitments, and that show how this is being secured, what the level of commitment is, and when this funding would become available. This third-party contribution could be in the form of land. However, if it is in the form of land, a letter will be required from an independent valuer that verifies the true market value of that land. You have to also understand, show any gaps in funding and explain these gaps and what further work might be needed to secure third-party funding contributions. You have to also, the bid should also include information on margins and contingencies that have been allowed for, the rationale for these, and also set out the main financial risks and how these would be mitigated. And especially if costs are going to overrun, then how this overrun will be shared between the non-UKG funding partners. So obviously it's not that cannot come out of the bid, the funding provided through the levelling up fund. And a detailed risk register will have to be appended to the form, which will be cross-referenced within the main written part of your submission. In going on to the commercial case, a robust procurement strategy with the rationale for the procurement strategy selected and other options that have been considered and discounted has to be drawn up. The procurement route, whether through existing frameworks or term contracts or to open tender, should be set out with an explanation as to why it is the appropriate one for the bid, for the scale and nature of the project that you are submitting through this bid. And obviously, all procurement must be made in accordance with the relevant legal requirements, and bid applicants must describe their approach to ensuring full compliance in order to discharge their legal duties for this part of the work. You also have the management case, which should be given in the plan of a detailed, in the form of a detailed delivery plan, which would have to demonstrate that the ability to spend some of the fund in 2021-22 for the first round of submissions. It needs to set out clear milestones, key dependencies and interfaces, resource requirements, task durations, and contingency, which is the norm. It was also required to provide information on the roles and responsibilities, the skills capacity, and if additional capacity is needed. Arrangements for managing delivery partners and the plan for benefit realization must be included. And of course, engagement of developers and occupiers needs to be demonstrated, as well as a strategy for managing stakeholders that Trisha spoke about. You would also need to provide confirmation of statutory approvals for such as planning applications, details of information of ownership and agreements of land assets that may be required to deliver the bid. And finally, there is a risk management, which should be demonstrated through a detailed risk assessment, that sets out all of the barriers and level of risk to the delivery of the bid, provides appropriate and effective arrangements for managing and mitigating the risks, and as well as a clear understanding of the roles and responsibilities for those risks. For example, if you consider infrastructure projects, one of the most common risks that you would face would be perhaps the presence of unexpected utility services. And the risk would be that there would be an impact on program, there would be an impact on cost. And you need to set out how would this be mitigated. Perhaps there would be a built-in it would be built into the contingencies, and perhaps there will be an allowance. The impact on the program could be mitigated with careful on-site management, and this needs to be set out. And finally, as part of the management case, bidding authorities do need to provide evidence of track record and past experience of delivering schemes of a similar nature and scale. And eventually, we do need to provide a monitoring and evaluation plan about how the bid level M&E objectives and research, which includes bid level M&E objectives and research questions, provides an outline of the approach and gives an overview of key metrics for the M&E. So for instance, if the bid objective is the regeneration of the local high street with an expected outcome of making it more accessible and attractive for the residents and the businesses, Then key metrics could include before and after footfall, property values, commercial and dwelling vacancy rates, and so on. And you also have to show a good resourcing and governance arrangement for taking this M&E work forward. So that's these three cases and the M&E requirements, and I'll pass it on to Andrew for the next bit, which is the question Q&A, I think.
Great. Thank you very much. Thank you very much, Bharati. So hopefully you can see there how the application form does fit very neatly with the Treasury 5-case model, and it really doesn't have anything that we didn't expect to see in it. So right, so we're going to move on now to some questions and answers. So we've had quite a few coming in so far, which is great. Please do keep them coming, and we'll try and get through as many as we can. Before we start, I just wanted to go back to a key question that we had in the last webinar, which we weren't able to answer at that point, which is, what is the decision-making process for these bids? So in the technical note that was produced about a week and a half ago, this is set out. There's a first stage. Now, this is very focused on the first application window, the deadline being the 18th of June. So there will be other rounds after that, but for the one for the 18th of June, there is an initial gateway pass and fail, which is, will expenditure start this financial year? If the answer to that is no, then that will immediately rule out any bid for round one, which is the June the 18th deadline. The second stage is assessment against criteria and scoring. So I'm sure you've all been involved in some sort of process where you were assessing an idea or a business case against criteria. And those criteria are characteristics of place. So how, regardless of what you're proposing, how does your area really need investment? And this will be based around the government's assessment of place using the criteria that they used to categorize areas. And that information, agree with it or not, is available on the government, on the Levelling Up website. Then there will be an assessment against each of the three areas. So strategic fit, value for money, and the deliverability. So that will arrive at a short list of projects. Then the third area is the ministerial decision making. So as part of this, and this is where it becomes slightly more subjective, the government will want to see thematic splits, so that they'll want to see a range of different types of projects. They have said that they want to see a geographic spread. There's a right withheld, so the guidance is very clear that ministers withhold the right to put a weighting on the different elements of criteria. So it could well be that strategic fit gets a higher weighting than deliverability, for instance. I don't know exactly how that would work, but that is made very clear in the technical note. And then also something which would be taken into consideration would be other investment. So it could well be, as the example which is given in the technical note, if your area has had investment from another government fund, or perhaps if you're making an application in a later round, but your local authority area has been successful in an earlier round, what is the impact of that? It's not saying that you can't make another application, it's just saying what is the impact of that. So let's move on to some of the other questions which have come in today. So one which has come in is, how many projects, inverted commas, can be in a single bid, and do they have to be linked? So Bharati, do you want to answer that one?
Yes, I can get that one. So basically you can put in a single bid, or you can put a package of bids, and the package of bids can have a maximum of 3 projects. However, you have to demonstrate that the 3 projects are linked, or they are they form a coherent set of interventions. They could be mixed in terms of the themes. So for instance, you could have 3 projects, one of which deals with transport infrastructure, another one which is regeneration, and the third which focuses on culture and heritage, but somehow they must form a coherent whole. And the issue though with the package bids is that the bid submission would have to have 2 parts, and which is not the case with a single bid. A single bid goes in as just that one main um, uh, application. But for the package bids, you would have a part 1 which looks at the which summarizes the overall strategy and the overall financial case. And there is a second part which specifically goes into each of the projects and gives a full case for each of those projects. And for the first round, there's that thought about do you have your projects ready to be put together, and also are all of the 3 projects robust enough, because one of them could possibly have an impact on how the overall score of your bid submission is. So yeah, so that's the case.
Great. Thank you.
Yeah, I hope that answers it.
Yeah, no, I think that does. I think that does. I don't think I have anything else to add there. So I'm going to try and get through some more of these questions. So another one is, how exactly does it work with MP support? Are they limited to supporting a single project? Tricia, do you want to say something on that? You did cover this a bit earlier, but just to really clarify it.
Yeah, for sure. So an MP can actually support any and all of the schemes in their area in the usual way. So there's no restriction there. However, the piece is that they can only prioritise and formally support one bid, or as Bharati's just said, one package of bids. And that's again where she mentioned around 3 projects that are strategically linked. So essentially, they are being asked to give their support in writing. So clearly that's a way of monitoring who is supporting which bids. But they are really, it's really coming down to the fact that this is about local lives. This is about making the biggest difference. So who is the MP that is supporting this? It is essential around when do you engage them, how do you engage them and get them behind the bid. Of course, one of the other benefits of working with your MP is that they will stress test some of the assumptions you're making about this bid and the impact it will have on the local lives. So
yeah.
Really, really good to actually get the MP involved early. So whilst it is about the letter at the end of the bid, it is about the letter and the formal prioritised support. Essentially, it is also making sure that they help you to stress test the biggest impact, because as you say, Andrew, that's where the money will go.
Yeah, excellent. Thank you. So another question, how many bids can a local authority submit? It's a bit confusing. So agreed, it has been a bit confusing. So from our reading of the guidance, the number of bids that a local authority can submit, which could potentially be successful, is based on the number of MP constituencies which fall wholly in that council area, or partly in the council area with agreement that that council will represent that MP's bid. So it's very much around MP constituencies. Our understanding from reading the guidance is that each of those bids could be up to 20 million. And actually, so the result of that is a local authority area with 3 MP constituencies could, in theory, make 3 successful bids for up to £20 million each. That's our understanding of it. It could well be that when the Q&A comes out later this month, that is further clarified. But from my own perspective, it does make a lot of sense, because if you were to consider an example might be Cornwall, which has, I think, 4 MPs. That's a unitary. It wouldn't really be fair for Cornwall just to be able to make one bid for 20 million, where a small district with maybe 1 MP or even part of an MP's constituency was also able to make one bid for 20 million. So in a common sense, looking at it through that lens, I think that it is very much around MP constituencies. In addition to this, county councils with transport powers, combined authorities, and the GLA in London can also submit a transport bid, which is above and beyond those individual bids. Then there's a question, should we be pressing hard for round one? This is, I'll start the answer to this one and see if Bharati and Tricia want to contribute as well. But this is a judgment call for you to make. And it's based on a number of factors. So do you have projects which are ready to go? So the 18th of June will come around really quickly. So do you have projects which you have the capacity to pull together for an 18th of June bid, or would you need some external support to actually make that deadline? Other factors to consider are, if you're a category 1 council, then delaying for round 2 and beyond will mean that you will be able to access that £125,000 capacity funding support. Going for the first round, certainly the prospectus made it clear that you wouldn't be able to access that. So I think in some ways it's a kind of a crowd control element as well from the Treasury, where it wants to kind of, you know, not have everybody rushing for round 1 as well. The other thing to consider, if you're not a category 1, if you're category 2 or 3, and I think one of the other questions which came in was about what should we do if we are category 3. Given that it's likely that a lot of the category 1 areas will want to access that capacity funding, quite rightly, then there is an opportunity for other areas in category 2 and 3 to really push for that 18th of June deadline, because I would imagine the government are going to want to be awarding a number of projects through that first round to demonstrate that the programme is off to a strong start. So is there anything, Bharati and Tricia, do you want to add anything there?
Yeah, I'd like to just add, in terms of the readiness, the project readiness is around the stakeholder engagement, because this is about economic differences, and it's being able to really evidence that you've engaged widely, you've understood the community needs, and that you can actually put some weight behind that. So I think ask yourself the question, will that stand up? Have you been able to, given the COVID situation, have you been able to really widely and deeply engage with those people that you'll need to evidence that you have done that? So that would be another question I'd ask Andrew in making that decision as to whether the June deadline is the right deadline for your project.
Yeah, great, thank you. So let's see now, what type of project should we be considering for round 1? Bharati, do you want to pick that one up?
Yeah, I think any projects that are shovel ready, because you would need to spend some of that funding in this financial year, and that's the one that will probably stand a better chance. Yeah, I think that's. Anything else you want to add, Andrew or Tricia? That's the main thing I would imagine.
Yeah, no, I think that's fair. There's a question here, have I got time to submit for round 1? We're actually working with a number of areas to help them put bids in for round 1, and I think the answer is yes, but you need to be getting on with it, because the application form is pretty detailed. There is quite a bit of work there to get your strategic fit answers together, to evidence the need to do the work around that benefit cost ratio, and then just pulling together all of the financials and project management information. So yes, there is absolutely time, but you need resource to do it. What can I expect for round 2 and beyond is one of the questions. I'm interpreting that as when might round 2 come and what might it look like? My personal expectation, and please don't take this as from any guidance or anything, is that I would expect there to be another round later in the year, around autumn time. Given that the government wants to get through the funding and to try and have as much of it having an impact during this Parliament as possible. It would seem crazy to me not to have another application window later in the year. So if you were not going for round one, then there is, I would expect, again, this is not based on any guidance, this is just what I would personally expect there to be another opportunity later in the year. But as I think Bharati has said there, if you do have projects which are ready to go and you're not a category 1 area and therefore won't be getting any of the capacity funding, then why not make a push for the June the 18th deadline. Another question here, should I bid for the full 20 million or is it better to go lower? Who wants to have a go at answering that one, Tricia?
Yeah, I'd be happy to answer that. I think the question really is, what problem are you solving? And actually, I would be thinking about the project from that perspective rather than the maximum amount of funds. Of course, you can, as Bharati said earlier, you can do a package. So you can have 3 smaller projects that are strategically linked that can take you some way towards the 20 million. But I think there has to be real evidence around it having a major impact on the local area. So I think that would be the starting point for me. And I would kind of work out what funds are needed rather than trying to shoehorn a project into a funding application of exactly 20 million. I don't know, Andrew, Bharati, if you would share that view, but be interested to hear your thoughts.
No, I certainly would share that view. Bharati, do you want to add anything, or are we good on that question?
No, I think you've covered it, Tricia. That would be the way I would look at it.
So another one, is scoring weighted in terms of priority area? How are the areas actually prioritized? So there is a note on the Levelling Up government website which sets out how the methodology they used to categorize areas into category 1, 2, and 3. As if you recall back when I was talking about the assessment process, part of that is place characteristics, which my understanding is that will be based on that methodology. So that's part of it, but it's only one part of it. The other parts are strategic fit, value for money, and deliverability. So if you are not a category 1 area, you don't give up. There's plenty of opportunity to do really well, to have a project that fits really well strategically, locally, and with government priorities that can demonstrate really good value for money, as in a strong benefit cost ratio, and then also be very deliverable with really well managed risks. So I mean, yes, if the government has classified an area as more in need, then yes, that certainly helps, but it's not the whole game. It's just part of the game. So I'm going to take just a couple more questions, and then I'm going to try and let people go just maybe one more question, and then let people go a couple of minutes before 12 to give them time to get to whatever they have coming next. So do we expect the themes to remain the same in later bidding rounds? I think that's a really good question. The easy answer would be to say probably, but then it was made really clear in the prospectus that these themes, which we haven't discussed today actually, but which are in the prospectus, there's 3 main themes, which you should have a look at, are for round 1. Now, it could well be that once the government look at the bids which they have got in for round 1, that they may adjust those themes. So I think that's a really good question, but for more detail on that, look at the Levelling Up prospectus. So I'm going to just draw the question and answer element of this to a close. We did have quite a lot of questions, so it could well be, and I know that my colleagues were answering some of them as we went along. So it could well be that there are some left over. If that's the case, we will send around a Q&A afterwards. But just to wrap up, I think our advice to all of you would be that you've got some quick decisions to make as to whether round 1 is for you or not. And hopefully we've given you some examples of the things to think about there. We'll send through the slides and any relevant information that will be useful to you, including links to the Green Book, the MHCLG guides, and the Department for Transport Analysis guides. Things to look out for. The latest information said that there would be a Q&A document coming out in April, so keep an eye on the Levelling Up the Government page for that. Information on further rounds, that further guidance that was talked about in the spring, that will most likely have information on when future rounds will be and deadlines for those, and possibly even information on how to access that 125,000 capacity funding. As I said, we're already supporting some areas to make applications, but for everybody, we'd be very happy to offer a pro bono workshop to help you think through and maybe shortlist some of your ideas, and to maybe help you develop a strategy for how you will approach the fund, whether round one is for you, whether later rounds are better. So that is everything that we were going to cover today. So just on behalf of Tricia, Bharati, and myself, just to say thank you very much to all of you for attending. I can see by the participants that almost everybody has remained through the whole thing, which is always really reassuring when you do this type of thing. But our contact details are there, and if you are interested in a follow-up workshop, then please do get in touch. So thank you, everyone.
Thanks, everyone.
Thank you.